It's now the time to be getting back into China stocks. Hello everyone, my name is Royston, and today I want to do a quick video with regards to China stocks, particularly those that is listed on the US exchange. Now, I believe that a lot of us at some point of time in our investing journey would have bought into the likes of China blue chip counters like Alibaba, Tencent, Meituan, etc. And those stocks have been significantly underperforming their US counterparts for, I would say, the longest of time. Now, is it the time to be getting in? Now, there are still concerns whether or not we are looking to catch a falling knife or potentially the bottom is here and it's over, and now it is time to actually be buying into these China shares with a longer term horizons. To be honest, I'm still sitting on the fence. I'm not very certain that China has seen the worst, and therefore it is time to be getting into China related stocks. But today, if you are looking at it from a contrarian standpoint, China is definitely unloved by many investors, and at this current juncture, there's still not much talks with regards to getting into China. You don't see much headlines on the media drumming up China counters saying that the bottom is over and it's time now to be entering. However, there are actually a few articles out there, one by Morningstar, which basically highlighted what might be some of the reasons that one should actually be buying into China at this current juncture. So he actually stated 5 reasons. And the reasons are basically that profit margins are currently pretty low in historical perspective, and the only direction it is up. So that's one. Second is that valuation is now very attractive, and this is something which I believe that a lot of us who have actually been monitoring the China market would actually concur that valuations is nowhere as expensive as that of US stocks. It is definitely at the lower end of the valuation range. But the question then is, does it mean that it is time to be getting in? The third reason stated is that there is a lot of pessimism in China equity valuations, which is pretty well evident as well. And this, however, is actually misaligned with the underlying fundamentals of the company, meaning that the companies are still growing, the companies are still generating strong cash flow, and that basically is the reason why investors should now actually be looking at these companies, because fundamentally nothing drastic has really changed. Whereas in terms of valuation, share prices have collapsed pretty significantly, that it is now time to be entering into this fundamentally strong price trading at a discount. Fourth reason stated is that more from a portfolio construction angle, today you might actually be looking, or you should actually consider getting into some of these stocks to potentially also diversify your portfolio quite a fair bit, because a lot of us, I would say, would be pretty heavy on US stocks. And the fifth reason is that despite the fact that China is definitely seeing a lot of challenges on the macro front, on the GDP side, as well as on its real estate industry, but nonetheless, it is still one of the fastest growing developing countries in the world. There's still quite a fair bit of growth potential if they are able to get their act together. So the question then is it right now? Is the time right now? Like I mentioned earlier at the start of the video, I don't have a clear answer to that. But what I am seeing right now, what I'm observing right now, is that a lot of stocks, a lot of China-related stocks have actually slowly been creeping up since the start of the year, especially over the last 1 month. And that is something which you might not be very aware of, because it is not something that is extremely evident from the media perspective. The media is not beating the drum and saying that now is the time to be buying China. China stocks have been appreciating very strongly, outperforming its peers, and therefore you should be getting in. We are still not seeing that article yet, or those kind of articles yet. However, you can see that over here, an article by Forbes, which actually highlighted just yesterday that there's actually a market rally from China's side, which continues to go unnoticed. So that rally has actually been led by growth-related counters, which is also supported by strong volume flow. So that is something to kind of like take note Today, if you are actually vested or you have been vesting in stocks, the likes of Tencent, Alibaba, Meituan, kind of like given up, and looking at it more from a longer term perspective, you might not have noticed that they have actually been generating pretty strong outperformance or share price performance recently over the past few weeks. And that has spread across not just the blue chip names, but potentially across some of the more volatile EV names, electric vehicle stocks as well, BYD, Xiaomi, Li Auto, XPeng, etc. NIO. Stocks that have been previously unloved, a lot of them have actually been rallying quite a fair bit recently. Today, if we take a look at the iShares MSCI China ETF, we can actually see that on a, I would say, longer term horizon, 1 year basis compared to the SPY, it has still definitely been lagging. But on a year to date basis, which is after roughly about 4 months, there's actually a slight outperformance in China stocks as compared to the SPY, the S&P 500, which is up about 7%, whereas China related stocks or the China index is up about 12%. So there has been a bit of a catch up, and that catch up has been pretty evident over the past 1 month, whereby China stocks were trading in strong positive territory over the last 1 month, up about 10%, whereas that of the SPY is actually down about 2.7%. Just yesterday, it is up 5%, whereas the SPY is only up roughly about 1%. So slowly, these names are actually coming back, and that is getting a little bit of my attention, and I want to actually be seeing if I can actually be capitalizing on some of this China stocks that is listed on the US exchange. So what I did is basically I used my stock screening platform, and one of my go-to favorite stock screening platform for US counters or stocks that's listed on the US exchange, NYSE, NASDAQ, etc., is the Stock Rover platform. And over here, I have actually found quite a handful of stocks, China ADRs, China-related counters that is trading on the US market. So this is basically a full list of stocks screened based on market cap, largest being Alibaba, followed by NetEase, JD, Baidu, and then Trip.com, rounding up the top 5 in terms of market cap. And today, if you want to look at it from a valuation perspective, these names, you can see over here that most of them on a 5 years valuation basis, if you are looking at it from either price to free cash flow range or price to earnings range, they are all trading, I would say, below the 50% level. So closer towards the lower end side as compared to the higher end side. So there's definitely value over here. But of course, the question is it time to be getting into the counters right now? So for me, what I do is basically I want to be finding some of these counters whereby fundamentally they are still strong, but yet in terms of valuation, they have actually been beaten down quite a fair bit. So in terms of fundamentals, what I would like to look for is typically free cash flow generation. I want the counters that I'm looking at. So among the China counters, China ADRs, there's roughly about 68 of them. But if I were to only streamline them to just focus on stocks which is generating free cash flow, that figure drops to roughly about 39. So these are the 39 counters which I would like to focus on. So this is the name of all the 39 counters. You can actually list them by market cap, etc. And they are the ones that I want to potentially be looking at for the long term. So I have actually saved this list. So this is my list of 39 stocks. I've actually saved this list into Excel. And what I want to do at this point of time is to evaluate, is there a timing factor? Or can I actually be looking to time the entry of some of this, I would say, fundamentally stronger China ADR stocks, whereby there is a technical signal to go long on, to be vested, be it on a long duration basis or on a, I would say, 6 months to 1 year basis. So I also want to incorporate some technical factors or timing factor into the selection of some of these stocks. So what I did is basically I would download this list into Excel and I would upload into this platform called Traders GPS, which is what I use to select stocks based on technical factors. Okay, so I would actually have put it into a watch list, download it, import it over onto this platform, and it's now over here and I've listed as China. So these are the names of all the fundamentally stronger ADRs, and I want to be finding which are the ones that I can actually be looking to enter at this current juncture. So there's so many of them, there's no intention to be entering all of them. Which are the ones which I could actually be looking at to enter at this current juncture? So I can actually be looking at it from a longer horizon basis. So today, if I were to actually select position weekly, it will come to this list, or you'll show me this list of stocks that actually have longer term buy signals. So these are stocks which is ready to be entered on a longer term horizon. Some of the names over here, the most popular one being JD.com with a market cap of 50.6 billion. So today, if you click onto this, it'll come into this chart and it will show you that there is actually a recent entry signal for you. When the candlestick actually changes color, breaks the last high, that is where potentially you can be triggered to enter. So the entry would have been somewhere around the $30.60 level compared to where the share price is currently last traded at about 32.64. So this is already triggered in, and potentially if the share price can rally back to its all-time high of about $105, that would have been a very fantastic upside of, say, 230%. Okay, 230%. So there is a signal for JD.com for one to actually be entering with a longer term horizon, roughly about 1 year or even longer. Some other counters that might be interesting is IQ, symbol IQ, ITE over here, which currently has also been triggered in terms of entry. So you can see that the candlestick actually changes color from red to blue, and this candlestick actually breaches the last high. So that is actually a signal for us to be entering. So the entry price would have been somewhere around $5.10, which is where the current share price is trading at this current juncture as well. And today, similarly, if we can actually rally back to the last high of about 46, the upside potential would have been pretty substantial. But of course, so what's the upside potential? Today, if we are looking at it, 750%. But of course, that might not be very realistic. Fundamentally, these stocks are still pretty sound, pretty robust, generating free cash flow. That is what we are looking out for. But for the counter to actually be rallying back to the last high, which was back before COVID period back in 2018, basically China stocks would have to see a strong improvement in terms of their underlying fundamental performance as well as the macro outlook. Foreign investors would need to be coming on board. Without that, it is very tough for the share price to actually be rallying back to the last high. But there's actually a signal that there could be a potential change in terms of the trend. And this is something that we want to be actually paying out for or looking out for. Now we can also be looking at it from a shorter duration basis. So instead of a position weekly basis, I can look at it from a position daily basis, which is a shorter horizon, roughly about 6 months to a year, as compared to the position weekly, which is typically holding horizon of 1 year or more. So today, if you are looking at it from a position daily basis, there's actually a lot of candidates out there that is having that trigger signal. JD.com is also one of those stocks whereby on a medium-term horizon, you could also be looking at a entry. Another stock could be Alibaba or Baidu. So these are blue chip names that many of you are very familiar with. So they also have got a positive signal. So using this platform is very easy for me to be finding the relevant stocks. So I have got a macro team which is now looking at China counters. I want to be finding stocks that is in the early stage of a potential long-term uptrend, which are the ones that is showing me a clear sign that it is time for entry. And I'm using the Traders GPS platform for that entry. So for those of you guys who are interested to find out more about using this screener function, do check out the link that is somewhere in the comment section. Join the preview session that will be hosted by the founder and creator of this Traders GPS platform, Mr. CollinSeow. He will actually be running you guys through how easy it is to be selecting stocks based on the Traders GPS screening platform. With that, thank you very much, guys. I will see you guys in the next video.